What's up guys, welcome to a new video, welcome to my YouTube channel. How are you doing? I'm doing really good. In today's video I'm gonna go over pips, points, pipettes, lot size and leverage, because those are one of the most misunderstood concepts in trading and one of the most difficult things to understand when you are starting with trading. I remember when I was starting trading and I was like, lot size, what is this? What does it mean? What is leverage? What is a pip? And then I would go to Google and you find all this complicated, overcomplicated information. So I was like, you know what? I need to make a video for the people that are new to this. So I'm going to make this as simple as possible and as short as possible so you understand what it is. Okay, let's jump right into TradingView. So to start with, a pip. What is a pip? A pip stands for percentage in points, and it's the smallest price movement a currency pair can make in forex trading. Okay? A pip is always the fourth decimal. There are some exceptions, like the Japanese yen, where it's the second decimal. So a pip is always 0.0001, the fourth decimal, or in the Japanese yen it will be 0.01, right? The second decimal. So I put this example. Let's say we are on Euro USD and the current price is 1.14678. What is the pip? The pip will be 7, right? Because that's the fourth decimal. And if you would make 10 pips profit, then what would the price be? The price would be 1.14688. Then you make 10 profits. On the other hand, let's say that you're gonna go short. And now you lose 20 pips. So 20 pips less. How much would it be then from this starting amount? Then you would have 1.14658. You lost 20 pips. Okay? And it is always, like I said, in the Japanese yen it's a little different. It's the second decimal. That's just because the price is it's just like that. Okay? Easy. And that's the only thing you need to know about pips. Now let's go to pipette and point, because if they didn't make pip already complicated, they had to add those two. So what is a pipette? A pipette, the only thing it is, it's a tenth of a pip. So 1 pip equals 10 pipettes. Okay, so the pipette will be the fifth decimal on the currency, and in the Japanese yen the third decimal. So if you go back to this example right here, you can see that the pip is the 7, the pipette is the 8. Okay, here the same, the pip is the 8, pipette is the 8. And that is always, it's just the fifth decimal. And when it comes to the Japanese yen, it's the third decimal. Now a point, here is where it gets a little bit more complicated, but guys, write this down so you don't have to come back to this video. Write this down, everything, so you have it there forever, because it's really easy. A point in forex is the same as pipette. Yeah, I don't even know why they had to put point and just make it pipette. Like, why do we have to change the name of this? But a point in forex is the same as pipette. But a point in stocks or indices is a $1 price movement. This means that, in this example that I put here, if Apple is 150 pounds and it goes to 189 pounds, that means it went up 39 points, right? The same here. If Tesla is at $239 and it goes down to $210, that means it went down 29 points or $29. That's it. So points in stocks or indices is just a $1 price movement. If it goes up with $1,000, that's 1,000 points. If it goes down with $359, that means 359 points less. Okay, that's it. Now let's continue with lot size. So lot size refers to the amount of currency units you are buying or selling in a trade. Okay, the main three types of lot sizes is standard, mini, and micro. You also have nano, but it's rare, so I didn't put it on here. A standard lot will be 100,000 of the base currency. The base currency is the first currency in the currency pair. So euro against the dollar, it's the euro. Great British pound against Japanese yen, it's the Great British pound. The one that is on the left, the first one, that's the base currency. A mini lot size is 10,000 units of that currency, and a micro is 1,000 units of the currency. And that equals to like the thing that what I wrote here on the left, 1.00, 0.1, 0.01. That's the volume. When you are on the chart and you're going to trade, you have, for example, MT4, MT5 on the left side in blue, red, it says buy and sell, right? And everywhere. It's like this kind of here. You have sell and you have buy here. And then here you would write the lot size, but this is spread. But like in other platforms like MT5, you put your lot size here. So if you write there 1.00, that is a standard lot. It was 0.1 is a mini and 0.01 is a micro. So what is, like, for example, if I was gonna use a volume of 2.8, you can say that is 2.8 standard lots, or you can say 2 standard lots, 8 mini lots. It depends on you. So yeah, and that's all you need to know about lot size. This is the easiest one out of everything. However, how do we calculate the lot size? I swear to God, this for me was one of the most difficult things to learn when I started trading. I know there's a lot of position size calculators on the internet. There's a lot of these, calculators that do it for you, but somehow it was too hard for me to understand. So I have here a really simple formula that you can use. Lot size is the amount in risk divided by the stop loss in pips multiplied by the pip value. Okay, I know this sounds Chinese. I'm gonna put an example. For most USD based pairs, the pip value is $1 per pip for one standard lot. Like I said, one standard lot, 100,000 units. So 1 pip on the standard lot, if you use 1.00 in volume and the market goes up 1 pip, you make $10 profit. Okay, so this is for most USD pair place. So since we are on USD, I'm gonna put the example here. It's a little bit different with currencies that don't have the USD. Okay, lot size is the amount in risk. Let's say that I have a $25,000 account, and account, and I want to risk 1%. How much is 1%? That's 250. Okay, so now we have the amount in risk, 250, and then stop loss. This amount we have to divide it by stop loss in pips times the pip value. Now we know that the pip value is 10. So let's say I take this trade, I have my stop loss here. What does it say under? 5. Okay, my stop loss is 5 pips. So the stop loss will be 5 pips. That means that 1% is 250. So 250 divided by stop loss in pips, so that is 5 in this case, times pip value, which is 10. So times 10. This is equal to 250 divided by 50, which is equal to 5, okay? So, and we would have to use a lot size of 5, so 5 standard lots in this case, if we were gonna risk 250, so 1%. Okay, I know this is complicated, just use this formula if you're trading with USD. Okay, now, if I were gonna buy one standard lot, I would need 100,000 units of the currency. So that means that if I was gonna buy one standard lot, I would need 100,000 euro in my trading account. And I don't have 100,000 euro. You don't have 100,000 euro. Most traders, they don't have 100,000 euro. And there is where leverage comes in. Leverage allows you to control larger positions in the market with less amount of your own capital. Do I explain myself? There's a lot of different leverage on different brokers, you know, it depends on the broker, but there is leverage 1.100, 1.30, 1.50, 1.1000, 1.40, 200, 1.2000 I've seen. What does it mean? In the example 1.100, for every $1 of your own capital, you can control $100 in the market. So if you have $10, you could control 1,000 in the market. If you have $100, you could use $10,000 in the market. And it's the same here. For every $1 of your own money, you can control 30 in the market. So if I have $10, there will be 300 in the market. There will be 300 in the market. Same with everything. If here 1.1 thousand, if I have $1, I could control 1,000 in the market. Let me tell you one thing, guys. The maximum you should use is 1.30. Matter of fact, in the United States and in Europe, the maximum leverage that is allowed is 1.30 because they don't want retail traders to lose their money quick. By the way, I don't really believe that. I just believe that because you can put your money in the casino, right? And there is no limit. You can put 10,000 in the casino, and if you lose, then the fuck you, right? But suddenly, if you want to have a high leverage, then you can do it. I don't believe it. I think it's kind of so people cannot make big amounts of money. You know, everyone can just. I think it is like that. But anyways, I suggest that you don't use a big leverage because yes, profits multiply, but losses also multiply. So never use leverage above 1.30. And yeah, there are brokers that have 1.200, 1.500, 1.1000, but those are brokers that are not regulated in the United States or in Europe. So that's it, guys. That's it for today. I hope this video was really helpful to you. I hope that you have a better understanding of what pips, points, pipettes, lot size, and leverage is, what it means, and what we use it for in trading. I know I kept this video a little short, a little fast. That's because I want to make this as simple as possible. Let me know in the comments if you have any type of question. I will be answering them. Let me know what you want the next videos to be about. Subscribe to my channel and see you guys in the next video.